Hey investors and market watchers, welcome back. Gold just made headlines by hitting record highs, but now, prices are starting to dip. So what's going on? Are we seeing the start of a bigger pullback, or is this just a healthy breather before another surge? With U.S. China trade tensions heating up and recession fears still in the air, there's a lot to unpack. In this video/article, we're breaking down why gold prices are falling after a historic run, what's still supporting the market, and whether this dip is a smart opportunity for gold bulls to jump in. Here's why gold dipped, why investors are still on edge, and what could happen next. A dip, not a dive. Gold still holding strong. Spot gold recently fell 0.3% to $3,225.79 per ounce, with futures for June delivery dipping 0.1% to $3,240.87. While that's a modest retreat, it came just days after gold hit a record $3,245.69, an all-time high driven by fears of global instability. Despite the small dip, gold prices remain impressively high. In fact, they're still well above the critical $3,200 mark, showing that investor demand hasn't truly weakened, it's simply reacting to a short-term shift in mood. Tariff turmoil takes a breather for now. So, what caused the price pullback? Over the weekend, the White House confirmed that electronic goods would be temporarily exempt from President Donald Trump's sweeping 145% tariff hike on Chinese imports. That news injected a bit of optimism into markets, sparking a mild rebound in risk-driven assets like Asian stocks and U.S. futures. Investors breathed a small sigh of relief, thinking the worst might be postponed. But that relief was short-lived. Trump quickly walked back the optimism, clarifying that electronic imports will still face a 20% tariff, and hinting that new levies specifically targeting electronics are in the pipeline. On top of that, China hit back with retaliatory tariffs of 125%, and both sides appear firmly dug in, signaling that tensions could escalate again at any moment. This brief moment of eased anxiety allowed gold to cool down, but the heat could return very quickly. Risk appetite versus safe haven, a delicate balance. The current dip in gold is largely tied to improved investor risk appetite, a fancy way of saying that traders were momentarily willing to take chances on the stock market instead of fleeing to safe havens like gold. But let's not forget, the broader picture still leans heavily in gold's favor. The U.S. economy is flashing warning signs, with many analysts pricing in at least a 50% chance of a recession this year. The dollar remains weak, Treasury yields are under pressure, and the Federal Reserve has hinted at possible monetary easing, all conditions that historically lift gold prices. So while gold took a breather this week, the environment that drove it to record highs hasn't changed. If anything, it's getting more volatile. Goldman Sachs, this isn't the peak. Wall Street isn't calling the top yet, either. Goldman Sachs just raised its 2025 price target for gold to $3,700 per ounce, up from $3,300. That's the bank's third price upgrade this year, and they've even floated the possibility of gold hitting $4,500 in an extreme scenario. Why the bullish outlook? According to Goldman, the escalating U.S. China trade war, combined with recession fears and global instability, is creating strong and sustained demand for gold. Investors aren't just chasing a short-term trend, they're looking for long-term protection against what could be years of economic turbulence. Gold, in their view, remains one of the most reliable hedges available. Final thoughts: a momentary pause in a bull run? The recent dip in gold prices isn't a collapse, it's more of a reset. A temporary pause as markets catch their breath, and perhaps a moment for investors to reassess before the next wave of uncertainty hits. With global trade tensions still simmering, central banks signaling caution, and financial markets bracing for potential shocks, gold may very well have more room to run. And for those watching the charts, this dip could be a golden opportunity to get in before the next leg up.